one. What's up, party people? It's your host, Sunny Ray, for the Sunny Ray Show. Today, I've got a very exciting guest. His name is Kevin. He's the founder of Kadena Bitcoin, a decentralized Bitcoin lending and borrowing company that where the users can maintain self-custody, which is kind of crazy. Not gonna lie, the first time I think I've heard of something like that. So I am super pumped. I was watching, like I said, all your interviews before. You seem like a very interesting character, and we recently started talking, working together, and I'm very, very excited to kick this off. How you doing today, Kevin?
Doing great. I really appreciate the platform, and I'm super happy to be here.
Yes, likewise. So, we're gonna obviously go into the solution that you're offering the world and all of that, and like how interesting it is. And I have a bunch of questions around how you're even pulling that off. But um, can we start first with your backstory? So before you even heard about Bitcoin, I like to start there just to give people some perspective and at the end of the day, one of my main goals is to inspire other people to, start companies as hard as it is and as tough it is but to follow their dream, right? Because why not? It just makes sense.
Yeah,
So why don't you tell us a little bit about your background and fascinating, yeah, like where you were doing, what you were doing before you got into Bitcoin?
sounds good. So I'm Canadian. So after university, I studied economics, and then very quickly got into the world of foreign exchange. And so worked for a number of Canadian banks, and then a Swiss bank at the end, selling foreign exchange solutions. And in that world, you kind of work your way up from dealing with small businesses, commercial clients, corporate clients, institutional clients. And learned a lot about businesses, and hedging risk, and that was great. In about 2015, I left that world and went down a personal financial planning investment management road. Tried to open up a portfolio management firm in Canada, ran into some regulatory roadblocks despite having a CFA and 15 years experience advising the biggest pension funds and asset managers how to manage risk. And then one of the things I had done for interest was got my mortgage license. So I was able to open a mortgage brokerage shortly after. And, in 2020, 2021, that was a decent business. And so for me, Bitcoin was always around, and I would go to these foreign exchange conferences really from, 2010 to 2015 and see the Bitcoin slash crypto booth. A lot of times the people were, kind of old foreign exchange people who had moved over. And, I think for the most part, I dismissed it. I think everyone kind of sees Bitcoin as a bit of a mirror. And at the time, we were doing, hundreds of millions to billions of dollars a day in foreign exchange volume through our two-person desk. And it just didn't seem like it had the volume, right? From an exchange perspective, from my vantage point. So I kind of watched it. Didn't really think it again would ever catch on. The same FUD that you hear from everybody. Government's going to put an end to it, and but for me, that really changed. In COVID, there were certainly some interesting things. It seemed like a bit of a frothy market to me at the time. And then after, uh, things had calmed down and price had corrected somewhat with the introduction of the ETF, I really took notice. And, around that time, I guess it was 4 years ago, the Freedom Convoy started. Um, and, ultimately, with the Freedom Convoy, where that led to was the Canadian government freezing the bank accounts of people who supported uh, freedom. And that was, beyond shocking to me. And as somebody, with a lot of experience in the foreign exchange world where counterparty risk is a real thing, this really made me rethink, uh, you know, my relationship to risk and how comfortable I was having money in institutions where it could just be frozen at any point in time. And so both of those things together, kind of this mass adoption and the uncensorability were really interesting to me. And so 3 years ago, I moved to Costa Rica. And I think, looking back at the matrix, when you're away from the matrix, you can see some things that maybe you didn't see before. And uh, one of the things that, became really clear to me is that people in developing markets really don't have access to the same banking services that a lot of people take for granted in Canada and the United States. The people in Costa Rica are hardworking, smart, but at the same time, they don't have access to borrow money to buy a house, borrow money to buy a car, borrow money to start a business. And the result is it really impedes economic growth. And so it was obvious to me that there was capital missing from Costa Rica. That was the, piece that was missing for their growth. And then, when I started down the Bitcoin rabbit hole, it became really obvious to me that this was the solution to that problem, and not just, the problem of terrible bank services and wires getting lost and lineups, but actually being able to provide people financial services, through Bitcoin.
Fascinating. Wow. I have a question for you. So you said you spent how long advising financial institutions on risk?
Yeah, so um, I guess in 2006, I went to Montreal to run their foreign exchange desk and deal with some of the larger corporations in Canada and institutional investors. Um, and then my experience after that was interesting. I wanted to come back to Toronto for personal reasons. And this was the height of the financial crisis. And so I ended up taking a job at a clearing firm, and a lot of the foreign exchange business and volume was really supporting interlisted arbitrage business. So people who would buy a stock in the US, sell the stock in Canada, and have a foreign exchange conversion to do. And these were, companies that were doing hundreds of millions of dollars a day, trading RIM and Nortel and all these Canadian success stories at the time. Uh, and Then after that, there was an opportunity to go work at Credit Suisse, and there were a lot of really interesting tools there to be able to help clients to look at, correlations and volatilities, and um, you can trade anything, numbers against numbers. So it was really, incredibly helpful depending on the business, the margin, what kind of solutions made sense to offer different types of clients. And so, again, like the biggest corporates in Canada and the banks. And so my mandate at Credit Suisse was really more to build their electronic business and also build their corporate business. I think at the time, their strength was really supporting institutional business. So a lot of the bigger pension funds in Canada. And it was really interesting to me because the model was very different. A lot of times, the clients were paying you back through foreign exchange transactions for other services that you were providing, um, whether it was access to, certain people within the organization or other things. And so, often you'd bring in some uh, thought leaders, connected people, and my job was basically to bring them to the meetings and be on the desk to execute the transactions when they needed to. And, obviously provide market commentary every day. And for me, that was what I loved was the markets. It was uh, always interesting and always something different every day.
And what was your, having grown up in Canada, I guess prior to the, even Bitcoin coming into the scene, what was your view of money? Is it something you would question? Was it something you just kind of took at face value? I mean, having like almost being, engrossed in the whole market scene, like money's central to it. So, but yeah, but just curious,
Yeah,
was it? Yeah.
It's a really good question. I and probably haven't thought about it too much. I'll say this. I mean, my kind of pre-Canadian heritage was Scottish, and maybe there's some uh, you know, stereotypes around Scottish people, but my mother um, had a coupon book back in the days of coupons, and she worked part-time so she could help take care of us when we were young. And I remember she would look at the flyers as they came from grocery stores where things were on sale, and she would have this book of coupons, and she would, stop at a different store every day on the way home to make sure that we were getting the cheapest food. So I definitely grew up in a house where money was, not wasted. My parents were very set on retiring early and doing other things. And, I think I learned, it didn't seem like they had a great relationship with work. Um, and so, yeah, I mean, a very interesting relationship with money. I think from my perspective, I think I was just naturally inclined with numbers. Like for me, the attraction was really to the numbers and finding a job where I could use numbers more effectively. And, in foreign exchange trading, you're doing things very quickly. And, being able to add and subtract numbers in your head very, very quickly is super helpful, or was at the time. And a lot of those things have been replaced by computers, which can do them much faster. And so, yeah.
And so now kind of let's go bit deeper into the wait, so actually no, one more thing I want to touch on was is what you're also a CFA, right? A chart holder.
Yeah. And so I did that right after university. And to me, that was, that I would say was my primary interest out of university. I thought I would be interested in being a portfolio manager. And, the CFA for me, having a degree in economics and the experience I had working in, before I got onto the trading floor, I worked in a few operational projects, implemented a value at risk system for a bank, and that gave me a lot of the background. But what I learned from the CFA was, some of the accounting aspects that were interesting. And so, uh, yeah, I mean, from an early age, even before the CFA, I guess I'll back up and say one thing that I think was pretty pivotal in my youth is my grandmother gave me shares of Canadian companies like Canadian Pacific and Bell Canada. So that became my Christmas present and birthday present was, kind of one share in these things. And you would get these embossed stock certificates. And yeah, I'm dating myself now, so I'll stop. But um, yeah, sorry, I'm rambling. I forgot what the question was now.
Yeah, well, no, I was asking about your CFA background, but that's but no, I love these types of things, and yeah, yeah, because like we spend all our days just thinking about like the how we're gonna make our business successful or whatever, but like the why is really the fuel behind all of it, right? And so, so it's nice to be able to capture some of that. Were you also doing mortgages as well?
I was, and so I owned a mortgage brokerage for about 5 years, from I don't know 2017 to till the time I came to Costa Rica, and there was a requirement to be a resident of Canada to continue with that business. So at that time, I knew I didn't want to invest a huge amount of time and energy in terms of building a business that ultimately knew I was going to walk away from. But going back, and I guess the reason when I left Credit Suisse that I wanted to start a portfolio management firm was because in Canada, the market isn't competitive as it is in the US and many other markets in terms of fees. There's five banks who operate and maybe it's just one bank at the end of the day. And the fees for investment products and investment advice are as high as they are anywhere in the world. So, people were paying 2.5% in mutual fund fees. And, frankly, that doesn't even include the foreign exchange spreads they're paying or other things that kind of get missed in that calculation. And so coming from a home where, every dollar was stretched as much as possible, and then understanding, if people are paying 2.5% in fees over their lifetime, they're, essentially giving more money to the bank than they're going to have in retirement. And so to me, it was really outrageous. And I really thought there was an opportunity to help people primarily save money would be, and adopt index funds and other solutions that would, greatly benefit them. And yeah, the Ontario Securities Commission wanted absolutely nothing to do with that. So I'll just leave it at that. I mean, at the time, Wealthsimple and a few of the other robo advisors had started, and yeah, I didn't feel like regulators really gave a welcome reception to anybody who wanted to compete with the banks. And with the mortgage business, what became very clear, towards the end was that you were kind of beholden to these banks for your liquidity, the money that was being lent, dealing with their policies, which, obviously you need to deal with their policies, but uh, towards the end, it became very obvious that the banks were doing things, as the market cooled after I don't know, 2022, 2023, the real estate market and mortgage volumes began to reduce. It became really clear that the Canadian banks were doing everything they could to kind of protect their internal channel, um, people going through the bank, as opposed to being able to offer competitive rates. And so,
Mm.
as a broker, one of the things we were always able to do was to be able to source the best rates, and you know that that seemed to end. And so the banks were very much interested in, you know, supporting their business internally and not paying brokers to bring the business to them. And so I think I continue to keep in touch with a few people in that space, and it seems to be continuing. So I wish them luck. But that was the other piece is you don't want to build this business that's dependent on all these other variables that you can't control.
So you grew up in a, you could say frugal-ish house. You
Oh, it was beyond
embraced
frugal.
you embraced math at an early age, which gave you, this like magnetic force pull towards, finance and foreign exchange. You worked at really the highest levels in Canada, advising institutions and whatnot on risk. Then you spent years in mortgage, and so talk to me a little bit about this. Okay, actually, what's your shortest answer on the question of what is risk?
Uh, what is risk?
Or let me rephrase it another way. If I had to ask you, what is risk a function of? If you had to pick, two, three variables, what would you say they are?
Well, I think risk is a function of, financial risk, we'll say, is you know, risk generally something working out against you. And I would say financially that is losing money. Um, and so, you can have a relationship with risk where if you're scared of losing money, you can put all your money under your bed, don't even, or in a safe. And if you're willing to take some risk, you can give it to a bank, invest it in treasury bills, bonds, and get further out the risk curve. Um, I think, and sorry, this isn't a short answer. I think the one thing that flipped for me, kind of in 2020, you know, seeing the growth of Bitcoin at the time, and I feel this way about a lot of things now, is the real risk is not participating. And so, you may, uh, I think it's safer to to live in fear and, avoid risk altogether, but there's some balance that needs to be achieved in order to, and so that whole framework where you go to a bank and you answer 8 questions about your age and when you need the money back and are you comfortable if your portfolio goes up or down? I really, really felt like those didn't capture risk for a number of reasons because they didn't, most people's primary asset was their house, and it didn't matter if they had a house or not. And if they did have a house and they had a huge mortgage against it, that wasn't included at all. So it seemed to me that there was a whole, side of finance that was missing information. Like everything was siloed and still is. I mean, you deal with your mortgage person for your mortgage, your investment persons for your investments, and your tax person for your tax. And, the idea of what I was trying to build with the mortgage brokerage and investment piece was a more integrated solution where you could, you know, look at look at everything a bit more holistically.
I used to run a financial brokerage like 20 years ago or something. Yeah. So uh, all I know is I had deep questions around that time around money and what is it and what's the history of it and what is inflation and just simple things. And I could never get a straight answer. And it was only until, I discovered Bitcoin, right? So talk to me about your Bitcoin aha moment. So how does a guy who's evaluating risk for financial institutions in a country which many would perceive as to be the most risk averse, and oh, we made it through the financial crisis, and oh, thank you to the financial gods here. All of a sudden, you have this flip. I mean, it almost sounded like to me the truckers had something to do with it. By the way, I was ground zero. I had my kids there in Ottawa. I have video of it, which I'm too scared to release on the internet because, the government here isn't the most friendly. But boy, was that a moment. That was like the best day of my life. So, and just to kind of like thread in the fact that I was in, where was it? I think it was in Miami when RFK spoke on stage the year before Trump started talking about Bitcoin. And he said, look, it was the truckers that got him to wake up to the whole Bitcoin renaissance. And you could argue Trump was perhaps influenced by RFK. And so I don't know. I like to think that, all roads lead to Bitcoin and the truckers, maybe. But tell me about that moment. What did that feel like? Like, was it being like rug pulled and you were like, what the hell's going on? Like, just talk about that moment a bit more.
With the truckers. So I was divorced and I had my kids a week on, week off, and I grew up in Ottawa, so I would just go back and forth, and uh, I gave cash to the truckers physically. You'd kind of stop along King Edward and just hand money to the truckers, and it was just that dumb luck that prevented them from freezing my bank accounts. And at the time, I really feel like Canadian housing was overvalued. Um, the rents didn't make sense in terms of from an investment perspective. The properties didn't cash flow. Um, and so there was something going on with the money and the housing market that didn't quite make sense to me. And that was really my initial interest and what got me into mortgages. But, when you have all your money in the system and suddenly you realize that there's this possibility that they can just freeze it and, have this power over you. Uh, I mean, that was just mind blowing. And so in terms of the aha moment, like I continue to have aha moments, with, with Bitcoin. But that was certainly a wake up call. And I think for me, looking at everything from kind of a portfolio management perspective, at a certain point, you realize that in a capitalist system, price is the information, right? So, when the price is going up like a hockey stick, that's telling you something. And you can choose to listen to it or not. And, I think the traditional financial services sector is kind of slowly starting to listen to it. But if you look at Bitcoin as an asset, like stocks, like bonds, like treasury bills, like real estate, and you can add this asset to a portfolio, um, it's going to improve the return of that portfolio or reduce the risk. It's, one or the other. And so from that perspective, if you believe Bitcoin's going to exist in the future, like stocks, like bonds, like real estate, um, you need to have some in your portfolio. And it's really a question of how much at that point. And so, I think we're, you know, top of the first inning in terms of seeing this adoption play out because if you do the math and you look at the CAGR and you look at the risk perspective, if you had any 80-20 portfolio or 20-80 portfolio and anything in between, once you throw Bitcoin into that mix, the amount that you would have of is pretty significant if you actually run the numbers. It's it's not 2 to 4% unless you're extremely low risk. And so again, it's kind of flips risk on its head. And the risk is not owning this asset. Government's printing money at 8% a year. And if you're not getting that, then you're exposing yourself to the risk. And, shout out to Jeff Booth because, understanding some of the concept, again, kind of give you that aha moment where you're floating through space and time and realizing the whole system is smoke and mirrors. But again, everybody has to have a financial advisor to
Mm.
protect the value of their money because the money is being debased at such a rapid clip. And we have an entire industry built around this. And in Canada, it's a significant industry, like because the profits are so high. And it's really just kind of this rent-seeking behavior where people who understand numbers are, helping the people who don't understand numbers. But at the end of the day, I'm not sure that they are helping. It's just, providing a service to, uh, help them avoid some of this debasement, but at the same time, taking a decent cut along the way. And so, maybe one day we'll get to a place where these people, are doing other things that are productive in society. If we can fix the money and we don't need, teams of people giving us tax advice and investment advice and mortgage advice because we have sound money. Like you mentioned Mauricio earlier from Leaden, and
Hmm.
and I've heard interviews where he's described, basically everyone in Venezuela, had this part-time job where they were, it was two jobs. You have your job, and then you have this other job where you're trying to protect the value of your money. And, from my perspective, I think we're further along that path than people want to admit in Canada anyway.
Yeah, yeah, that hit. So I was gonna say the Bitcoin thing, like you said, every day is like a new aha moment. I've been in this for quite a while, and it's yeah, never a dull moment, that's for sure.
But
Um,
but with Bitcoin, I think the other aha moment is
mm,
kind of removing yourself from the system, right? The matrix, I'll call it, back in Canada. And you see these good political cartoons when there was an election, but it's basically, cattle being stuffed in, whether you're going in the conservative door or the liberal door, you're really getting to the same place of, the system is, to me, it's a system issue. And so people spend a lot of time talking about politics and these issues with this, that, and the other thing. And, if you fix the money and balance the budget, all the issues go away, right? Like you don't have this, the system we have now is just leading to this. If the government has the ability to print money and run these deficits, then as a society, and they continue to do that, then we're just systematically over investing in government over and over again. And, you know, I think if everybody, if you asked investors, should we invest all of our resources in government, they'd probably say no. But that's what's actually going on, right?
yeah, yeah, and it's like I almost feel like it's these like second order effects that, you know, like for example, a lot of people, if you ask them why inflation exists, they'll literally attribute it to the greed of entrepreneurs. Right? So, meaning it's they have no clue that it's about money printing and an excess of it, and this the supply and demand curve, how it applies to money, and how if you increase the supply of anything like that, you're gonna decrease the value. Like these concepts just don't make any sense, I think, to the average person, or do they even want to really question it? It's like money's almost like this religious type of thing where people are set on it. And most people, you ask them, well, what is money? And they'll give you answers like, money is life, or money is well, meaning, or weird things. But it's like, no, like, what are the properties of money? It's like, why do we even have money? And until you meet Bitcoiners, you're just sent off on these weird paths.
For me, one of the aha moments I'll say just about Canada was, and money. Um, During COVID, we had this enormous money printing, um, which is essentially backdoor bailouts of the banks, and it was coordinated globally. Um, so with my knowledge, we have these central bankers talking about inflation being transitory, and like there was no way at any point they could have actually believed that as they were printing billions and trillions of dollars globally. Like
But how many
it
people know what transitory even means? See, there you
well,
go. Like, so much
exactly,
of it is lost in that, they just use all these pretty words.
but in Canada, during COVID, when there was this, massive run up in inflation that again was a direct result of the money printing, uh, the government was kind of vilifying Loblaws, which was the biggest private
That's what I'm saying. That's what
employer
I'm
in the
saying.
and
Yeah,
like
yeah, that's what I'm trying to say is people they'll be doing the money printing and then they'll be like, oh, bad guy over there.
mhm.
And people will buy it, hook, line, and sinker. Okay, okay, I know we've got to do obviously a follow-up if you're down for it. But I want to spend a little bit of time on so again, I like to think that a lot of the people who listen to my show, my mom and the three other people that watch are tuning in to learn about building on Bitcoin, building companies on Bitcoin. So talk about Kadena, talk about how on earth you're enabling people to take a fiat loan against their own Bitcoin without even giving up custody. This seems like this seems really interesting, but I'm not gonna lie, I'm a bit confused as well. Break it down for us.
Yeah, so I mean, to me, the entire point of Bitcoin is the self-custody aspect. I mean, as we talked about the trucker and that being important. So I was surprised that the solutions, when I came to Bitcoin, and I'm relatively new, like 3 years, and if when I wanted to borrow money against my Bitcoin, it involved sending my Bitcoin to a third party. And I thought, well, this is programmable money. Um, and if I was going to have a lot of money invested in Bitcoin, I wanted to be really sure that it had certain functionality. And to me, if it was just something kind of a medium of exchange, uh, that would ultimately have limited utility. And so if money can be used as collateral, if money can be used as store of value, and certainly Bitcoin's done well in that. But so I wanted to explore and I went down a deep rabbit hole for, months and months to see if it was possible to build a solution where people maintain full self-custody. And so what it is a peer-to-peer exchange where one counterparty is borrowing leveraged Bitcoin exposure, and the other counterparty is accepting a fixed fiat yield for giving up their Bitcoin exposure. I mean, we see something very similar in equity markets today with MicroStrategy, where they have, I would say there's a number of layers of third parties in the middle, but um, you know, they're borrowing money at 11% through these preferred shares to be able to buy Bitcoin. And this would be directly on chain, which is where we're doing it. And so, I can quickly go into more details, but cadenabitcoin.com. And basically, we have a peer-to-peer marketplace where lenders and borrowers can meet and agree on rates and terms to lend and borrow Bitcoin. And then we uh, broadcast the transactions directly on the Bitcoin blockchain. In terms of how they maintain self-custody, this is the magic of the Signer app that we've developed. And so it's a no KYC platform. We're a Bitcoin service provider registered in El Salvador. And because it's Bitcoin in and Bitcoin out, we're able to operate without KYC. The Signer app, so it's password, so email address, password, and 12 words, seed phrase. Well, the first time you sign into the app, which is open source, can create the 12-word seed phrase for you. You can create the 12-word seed phrase using Entropy, or you can connect any 12-word seed phrase wallet. And what it all the app is doing is storing the seed and allowing you to sign these transactions. So when the transactions are signed, we're getting that information, but we're not getting the 12 words. And so it's full self-custody in that way. Are you still with me?
I am. I'm just thinking through this, but hold on. So let's say you're the lender, I'm the borrower. It's my Bitcoin that I'm putting at stake, or not at stake, but tying it up somehow in the smart contract. I now have all of the keys for my Bitcoin, and I've got, let's say it's $100 worth of Bitcoin. I've got your $50 in cash. Um, I decide not to give you back your 50 bucks in cash, and I essentially run off with my
So
Bitcoin. So I'm
it,
still,
it's a great
what did I
question.
miss? Yeah.
So it's Bitcoin in, Bitcoin out. There's no cash in our market. And
Oh,
so I can go through an
wait,
example
I
of
take a
how
loan in Bitcoin?
correct. And so the way it
Oh,
works, and for me in the world of mortgages, there was always this idea, how do we simplify the process in terms of document collection, ID, income, credit score, doing an appraisal, sending them to the lawyer. And I think what I've discovered is that the way we do that is we get rid of the house and paperwork entirely, and we use Bitcoin as collateral. And so, just a quick example, the lender and borrower are both putting collateral into a smart contract. The lender's putting in, and so it's like a private mortgage, if you're familiar with that on Bitcoin. The lender is putting in the discounted value up front. So, say they're getting 10% interest over a year at a 50% loan to value, they're locking up 0.454545 Bitcoin. We'll call that $45,454 today worth of Bitcoin. At the end of the contract, to get their 10% return, they're going to receive $50,000 worth of Bitcoin. The borrower is paying the interest up front, so he's putting in 0.545454 Bitcoin into the smart contract. Then, from that point, for the length of that year, the borrower has exposure to this one Bitcoin smart contract. If Bitcoin goes up to $150,000 over the year, the lender's always going to receive $50,000 worth of Bitcoin at the end, and the borrower, in that case, would receive $100,000. It stays at $100,000. The lender always receiving their $50,000 worth of Bitcoin. The borrower, in that case, would be receiving $50,000 worth of Bitcoin. If the price went down to $50,000, the lender would receive all the collateral and the borrower would receive nothing. And so the distinction is that the lender, again, is getting this fixed fiat return, but it's paid to them in Bitcoin. And so they're putting a fiat amount in initially and then getting a Bitcoin amount in denominated in fiat, but it's always Bitcoin in, Bitcoin out. And so, um, yeah, that's how we do it. I first I was looking at the time and seem to have lost my train here, but so so
over
in terms of for fiat,
collateralization, is that how
let
you
me
essentially achieve this? Like essentially the borrower is having to essentially put forward a larger amount than they're even borrowing, and you're using
so
that as like your security or something? Am I kind of correct or
so
not really?
if the borrower what the borrower is borrowing in our case is they're borrowing leverage Bitcoin exposure. And so if the borrower comes and has one Bitcoin, he's locked up this 0.55 in a smart contract. He's left, if he only has 0.55 Bitcoin to begin with, he can leverage that to have one Bitcoin exposure through Kadena. If he wants to buy a boat, start a business, and has a need for fiat, he potentially has 0.454545 Bitcoin left. He can sell that Bitcoin today, get $45,454 worth of fiat. And at the end of the contract, he knows that if he buys $50,000 worth of Bitcoin, he's going to pay back himself his stack and be whole again with one Bitcoin. So, like going through the example, he'd receive 0.66 on at 150,000, and he'd buy 0.33 at by spending the $50,000. At $100,000 final price, if he buys another zero point 0.5 Bitcoin to pay himself back, he'll receive zero point 0.5 from the smart contract. If Bitcoin goes down to $50,000, he can buy a full Bitcoin for $50,000, even though he's not going to receive anything from the smart contract. And so effectively, we've removed banks from this system, and people can now, in full self-custody, hold Bitcoin. Alternatively, they can exchange that Bitcoin into a smart contract and earn a fixed fiat yield, or they can leverage their Bitcoin exposure in full self-custody.
When you say they can get a fixed fiat yield, that's where I'm getting a bit confused in the sense that it's Bitcoin only. There is no stable coins.
Correct.
And
So,
so wait, are you saying it's like amount of Bitcoin in fiat terms? Is that what you mean?
correct.
But
Yeah. And
then,
so,
okay.
so in the example, like that I gave,
How does the smart,
lenders,
wait, what smart contract?
what's
Like
this?
where?
Sorry?
Like, no, I know what a smart contract is,
Oh,
but
so
where, like,
direct,
what are you using? Are you using, like, what, is there like a platform you're using for this? Like
well, it's
Rootstock or
so
Liquid or Starknet
it's
or are you, like, where is this smart contract you're talking about?
it's Bitcoin script directly on the Bitcoin blockchain. And so
Layer
the
one,
technology,
like
what?
just the actual, like, layer one Bitcoin blockchain,
Layer
not
one
like
Bitcoin.
some,
And so you can see the transactions with, a block explorer. You can see the transaction. The funding transaction is taking UTXOs from the borrower and the lender. And the settlement transaction is giving those UTXOs back to the borrower and lender. So the entire tech stack is the Bitcoin blockchain.
and who helped you build
And
it? You
not
built it?
not me. I got,
God, guys,
I'm not a
team,
programmer, but I was able to get deep enough down this rabbit
nice.
hole that I can describe this to programmers.
Wow.
An
Okay.
oracle, so it's all dependent on Bitcoin's price.
But even
The
that, how does the
transactions,
smart contract even know the price? Like, are they using chain analysis? But that's like, I mean,
well,
not
it's
chain
determined.
analysis, sorry. But like, how are they even getting understanding of the price?
So we've created an oracle that we've open sourced. And so it's a price feed from a number of different sources, and that determines how the split is at the end. And so at inception, uh, the clients are signing the funding transaction, in addition, signing thousands of transactions for what could potentially happen at the end of the contract. With the oracle's price, that is essentially a signature um, that opens up one of those doors, and that transaction is then published
Whoa.
or broadcast.
So this is a much bigger idea than I think something we can knock out in like 7 minutes or whatever. We should like if you're up for it, I'll be down to do a deep dive, maybe with some
We
diagrams,
could we could
some
bring the
workflows or whatever.
CTO in too.
Ooh, I would love that. I would love that. This is definitely something I'm super interested in. Yeah, because imagine unlocking lending on Bitcoin, on chain, no KYC.
Yeah. And
That
no,
is
and the
insane.
other advantage, because it's locked up in the smart contract for years, there's no liquidation. So again, no liquidation, no KYC, no counterparty risk. And so to me, this is uh, the entire point of Bitcoin. And
Cool.
now I think we're at a stage where we can build financial services directly on
Cool.
Bitcoin.
So where do people, you said Kadena Bitcoin, I'll put it in the description. Do you have like a Twitter or I don't know,
Yeah.
where do you want
So
people to like reach out if they want to learn more?
Twitter's best at kadenabitcoin.com.
Okay.
Um, and so it's CADENA, bitcoin.com, and the website. And if anybody wants a demo of the platform, reach out and additional information.
Awesome. Thank you
I'm,
everyone for
I,
tuning in. Thank you, Kevin. That was amazing.